It's been extremely frustrating to trade this market lately. It's really driven purely by headlines, and then sometimes the positive headlines really don't impact price very much. The negative ones sometimes impact price. It's just a real disaster. Some of the best traders I know are really struggling with this price action as well. So if you're in the same boat, it's not just you. It's just one of those times in the market when the conditions are more difficult, and it really proves how important it is to survive as best as you can. Do not let your emotions take over, and do not go down the path of revenge trading. Easy conditions will eventually return, but you need to survive long enough to enjoy them again. The goal of this video is to hopefully highlight some key levels to set the foundation for potential trade arguments for the incoming trading week. I'll be going over Bitcoin, Ethereum, and Solana, and let's see what we have going on here on higher time frame charts. I still believe you really only need 3 horizontals to successfully trade this trading range. The first level is going to be 115.2k, the second level is going to be 107.8k, and the lower level is going to be 100.7k. Now, these are not new for these update videos. These are all older levels that I've been discussing for quite a while now, but the thought process with these levels is very, very simple. The first rule is do not assume that the level is going to break. So a lot of people will make the mistake of shorting into the level, anticipating the level to break, and then the break never happens. Same with a breakout. They're longing directly into the level, expecting a breakout, and it never happens. Okay, so that's the first and most important rule when you look at levels like this. So with that being said, we are currently within the upper range. So as long as this 100.8k support level is holding, I'm going to use this level as a foundation for long arguments. If price falls below this level, then I'll again use the same level, but for short arguments, and target the lower level here. So if and when 115.2k is reclaimed, then I will use this to enter into long positions and use that as a foundation. So with our foundation levels in mind, I'm breaking it down to the H1 time frame, and I'm going to look for anything that I could use for potential trade arguments. And the level here that I have highlighted is the H1 breakdown point. I highlighted it with a box, extended it to the right. We could see some pretty decent rejections from the level, especially from here, along with the rejection from here as well. The thought process behind something like this is, okay, this is clearly an area of resistance. I do not really want to be in a long position from exactly where price is right now, right? Because still, this is a level of resistance. So what would I be longing into? I'm longing directly into resistance. So very simply, what I do is wait for a reclaim or a break of the entire level. So I'm going to wait for the break, something like this, look to either long the breakout or bid the retest of the breakout zone. The invalidation is going to be the low before the reclaim of the level. So let's just say, I don't know, somewhere like here. Then take profit 1 is going to be our higher time frame foundation level. So something like this. All right, so I'm using that higher time frame level to my advantage, using confluence of lower time frames to actually pinpoint an entry. Now, if that reclaim doesn't happen, what will I do? Well, I have another foundation level at 107.8k, right? And we could already see that we have an H1 consolidation period here. We have a deviation of the level before a reclaim of the higher time frame level. Now, naturally, because it's a higher time frame level, I'm going to put more emphasis on potential trade setups from that level. So because it's a higher time frame level, that setup technically will be a bit stronger than something like just the reclaim of this red box. So at this 107.8k level, I have a few layers of confluence. One, of course, I have the higher time frame level. Then I have the H1 consolidation period. Then I also have the deviation of the level. So I have several layers of confluence. So a potential setup, if we do not actually break this red box, is going to be something like this, where I'll look to bid somewhere within this H1 consolidation period. My invalidation will be the low before the reclaim of the higher time frame level. So somewhere below 106.2k ish will be the invalidation point. And then take profit 1 will be somewhere within red, because I'm still using my lower time frame level as an area of resistance because it has not yet broken. Okay, so just like that, I came up with a few trade setups just from 3 very basic levels. So we're going to follow the same thought process for the Ethereum daily chart, right? We have our level of support here, our daily consolidation period. We have wicked into this level several times already. Then we have our area of resistance, another consolidation period, extend to the right. We've rejected from this level twice now. The concern with Ethereum is below these wicks, okay? And why I say that is we didn't build up any levels of support on the way up. They're not very strong. It's not something like here where you have a few rejections from the level before finally breaking out. Pretty much after the breakout, we retested the highs here, as you can see, and then ran up pretty aggressively, and that's pretty much it. We didn't establish a level of support like a consolidation period like this as well. So the issue with this and the concern is that if and when price breaks this level, it's going to be fairly easy for price to sell off pretty aggressively down to the 2980s-ish level. So the consolidation period at 2980s, because that really is the biggest level of support aside from the green box here. So Ethereum, again, you don't want to assume that the level of support is going to break, but in the event that support level does break and 3.6K does not hold, a potential short setup would look something like this, where the invalidation would be the high before the break of support. So wherever that could be, that's going to be the invalidation point. The entry trigger is going to be as close to the bottom of the green consolidation box as possible. Take profit 1 is going to be the consolidation period before the move up here, right in that 3K 2980-ish region. Now let's break it down to the intraday price action and see if we can see any setups developing now that we have foundation levels to work with. So there's nothing really that jumps out at me in terms of a level that price has been rejecting from on the hourly or H4 chart. What really jumped out at me is this H1 breakdown point, okay? Because initially I saw this area, so clearly an area of consolidation before a move up. We saw wicks into this level. We saw a few drives, a few attempts to hold this level before selling off. So I wanted to see where that level originated from, if there's anything I could use to kind of support whatever I'm seeing. So I highlighted this H1 breakdown point. I extended to the right and we could see a lot of wicks into the level, bodies, all of the good stuff that I typically look for at this H1 breakdown point. So what I could do is use this as a potential entry trigger for some kind of setup. What's also somewhat concerning about the intraday price action on Ethereum is all of these untapped lows here. We've been in a pretty tight consolidation range. In a range like this, it would not be surprising to see a sweep of the lows before the consolidation period. So something like this would be perfectly fine. We also have an H1 consolidation period below here, confluent with a sweep of the lows. So in the event that does happen, a trade setup would be something like this, where you long on the reclaim of the sweep of the lows. The invalidation is going to be the low before the reclaim, and take profit 1 is going to be our H1 breakdown point. Alternatively, I could also use the H1 breakdown point as a short trigger. So because we have a few untapped highs here as well, we have a level that could be used as a short argument. Let's say, just for an argument, there's going to be a bounce from here. Let's say it's going to bounce directly up. There's going to be a move very briefly above this level. It's going to get swatted down. We're going to wick above the level. We're going to close below that H1 breakdown point. We're also going to then move below our previous highs. So now price is below this. We've closed an hourly candle below the previous highs. We've swept all of the highs. We've rejected from an H1 breakdown point. The setup will be something like this, where you want to enter into the short as close to the previous highs as possible. The invalidation is going to be the highs before the reclaim. And then take profit 1, you're actually going to be targeting a sweep of the lows. So what would have been the potential long setup will actually be the TP for the first short setup, because in this environment you're kind of playing the game of tagging liquidity. So you want to trade towards liquidity and take profit in pools or pockets of liquidity. I still believe Solana has some of the cleanest higher time frame levels. They're all levels that I've discussed before several times. So the main level that is on my mind right now is going to be 179.5, so just sub 180. You can see that price has bounced from that level a few times already. It's pretty similar similar to Ethereum, to be honest, where we have a clean level that price has bounced from several times, and now we are interacting with the level again. A setup that I really like is when there's a clear level that price has bounced from or rejected from several times. The idea is going to be, if and when that level breaks, there's going to be people that are entering into short positions, right? But there's not going to be continuation for this setup. So people are going to be shorting, there's going to be zero continuation. Instead, there's going to be consolidation below the clear and obvious level. So when that happens, all I'm looking for is a reclaim of the higher time frame level. So let's say there's consolidation here. The trade doesn't trigger unless there's going to be a reclaim of the level. So if and when there's a reclaim of the level, the entry trigger will be the reclaim, the invalidation will be the low before the move up, and the take profit will be maybe some sort of H1 or H4 level, or it could be the next interesting daily level. Okay, so that's a setup that I would love to see on Solana. Will I get it? Who knows, but it's something to be aware of and to have kind of in your back pocket if the price action does develop that way. Very similarly to Ethereum, I think Sol below 180 can be a little bit scary because we don't have any recent price action between 180 and 165. So it wouldn't be too much of a surprise if price quickly cut through the 180s down to 165. I wouldn't necessarily be concerned. If that does happen, I think it would provide a really clean long argument, but it's another level that I just like to have highlighted and use as a foundation if and when the sell-off does happen. So Solana bounced perfectly from the higher time frame level, which is wonderful. We got a 6% bounce out of it, which is amazing. Then we have been consolidating pretty much ever since. So we haven't gotten many other trade setups based on the lower time frame price action. So now price is directly between two levels. So as I always say, it's not wise to diddle in the middle. You need to wait for an extreme of the range to occur. So one extreme would be a retest of the daily level yet again. So like the setup I just discussed, the idea is going to be to wait for some kind of move down to the daily level. Now, will it be another strong bounce like this? Who knows? Will it be a long lower wick? No one knows. But if there's not a long lower wick and price just sells off to the level and within the level, you really want to be aware of and looking for some consolidation within this entire area. Okay, so you can get an early entry trigger based on lower time frame price action within the level I just discussed. So in the event that the higher time frame level is not retested, I really wouldn't be interested in taking a long setup unless the 190.3-ish level is reclaimed, and it's really just the long lower wick here. Extend that to the right, we could see a few stabs into the level before bouncing. Price nuked through the level, came up, wicked into the level again, and that's the recent interaction we have with the level. So very similar to the potential ETH short setup is if there's a bounce from here, wonderful. If there's going to be a move up to above that 190 level, if and when it gets swatted down, this will be the potential short trigger where you have the invalidation at the high before the break back within the range, and the take profit one will be somewhere below the entire consolidation period range. Right? So the next pocket, next pool of liquidity, if there's already not a move down before this happens. Okay, so that would be the setup on the short side. But on the long side, if there's going to be a move up and no rejection, instead, if there's some consolidation, maybe chopping at the level, maybe something like this, that would also be a long trigger, and that's perfectly valid as well. The entry trigger would be as close to 190 as possible. The invalidation is going to be the low before the reclaim, and take profit one will be at some H1 breakdown point. You have several to choose from within this region. So as you can see from this video, trading is much easier when you start with a foundation of higher time frame levels and then add to it, right? We started with our daily time frame. We have our foundation levels highlighted. Then I'm breaking it down to the H4 an H1 time frame, and going through several potential trade arguments. The value in that is if and when something happens, you have a plan. So there's not going to be something that happens where you're scrambling to figure out a plan and rushing into a trade setup. You know what's going to happen. You know potential trade outcomes. Then you just need to stay calm, ignore everyone, look at the levels on your chart, and execute calmly. So I hope you enjoyed this video. We'll see what the trading week has in store for us. If you have any other further questions, comments, anything like that, please feel free to ask. Thank you.